Keep markets on edge with the ASX 200 heading south.
And oil prices have rallied on the latest developments in the US-Iran conflict.
Good afternoon, I'm Steve Daglian.
I'm Laura Besserati.
It's Monday the 13th of April. Welcome to the CommSec Market Update.
Well, it looks like we're on track to record a second straight day of losses. That being said, remember on Friday we were only down very slightly by a little over 1/10%. And today the declines have actually been fairly capped. They're down currently by 0.4% heading into the close. So I think it certainly could have been worse today.
It could have been much worse. I mean, also considering that last week was best in about 3.5 years. We're up 4.4%. It was as well, so just over 4 trading days, so that was quite impressive. And of course the reaction there, the reason why we did so well was because of that 2-week US-Iran ceasefire, which now seems more and more fragile, and it could have been worse because of these US-Iran talks that everyone was excited about at the weekend. 21 hours worth of talks as well, and it ended with no deal in place to end the war. There were some reports, of course, that the talks actually went well. They couldn't agree on some key details, namely nuclear weapons related, and since then things have deteriorated as far as what things are looking like at the moment.
Yeah, so I think the key detail is that they couldn't reach an agreement, and after that happened, we heard Trump say that the US Navy will blockade the Strait of Hormuz after those failed talks. The latest news is that US forces will begin implementing a blockade of all maritime traffic entering and leaving Iranian ports at midnight tonight, our time, as announced by the US Central Command following up on Trump's announcement. So I think all eyes are really going to be on that tonight and in the coming day.
Yeah, so the talks haven't completely fallen apart at the moment, but it does certainly jeopardise an already fragile 2-week ceasefire, which we're about halfway through now, and there's a bit of uncertainty, of course, on what the next steps might be, whether or not we're going to, see through this ceasefire all the way through to next week, if that's going to be extended, or whether or not the situation escalates as well. So we've already had markets responding to this, and oil prices at one point were up close to 10% this morning. They're now up around 7.5%, so they've come off the boil a little. US futures at one stage this morning were pointing to a decline of more than 1% tonight when they come back online. Now that's improved a little, but still futures are pointing to a fall of at least around 0.5% to a little more than that. And we had quite a bit of data out on Friday as well. One showed that inflation data was a bit relatively hot still. It's the highest in close to 2 years, in fact, and this was the first read into inflation in the United States, which captured, of course, all of this, the US-Iran war as well.
And I think the key thing out of that inflation data, yes, we were really waiting for this because this is the first insight into how the conflict has impacted inflation. So that headline number, as you mentioned, came in stronger than expected. In fact, on a month-to-month basis, it tripled. So it was up 0.9% in March, up from 0.3% the prior month. But if we take out the higher oil prices, that core number rose just 0.2% for the month to a 2.6% annualized rate, and that was a little bit below expectations. So you can see all of that inflation and heat coming through largely from the price of oil, which saw a record spike over the course of March, and also consumer confidence fell to a record low as fears mounted over rising energy prices and, of course, the broader impact of the Iran war. So I guess none of that information was really surprising to us.
Yeah, that's a good point. I mean, US consumer confidence, as you pointed out, did sink to a record low. It was down 11% in April. This is according to one survey out of Michigan as well. And I think taking a step back when we look at these type of movements in markets is always helpful. I mean, we fell 7.8% here in Australia in March, but in the very early parts of April, which has obviously been holiday short, and over the past couple of weeks, we're up 5.2% so far. So we've gone a pretty long way to recoup a healthy chunk of last month's falls.
Now, you spoke about oil prices before. Yes, they're soaring by around 7.5%, but they did fall back by around 13% over the course of last week on the back of optimism around the 2-week ceasefire deal. Of course, this is a very fluid and volatile situation, so we're seeing oil prices and equity prices really going up and down with the latest developments, and I think that will continue to happen as the war continues. Across the different sectors today, of course, energy stocks have been a standout. They're one of the few bright spots, lifting by around 2%. We're also seeing telecom and utilities lifting just slightly, but all of the other sectors are very much in the red. We're seeing tech doing worse. This is an interest rate sensitive sector, so they're down close to 2%. Our two largest sectors, materials and financials, are also falling back, which is adding some weight, and plenty of the other sectors down by around 1% as well today.
Yeah, I mean, there are a couple of stocks in that consumer staples space that are actually doing well though today. The two supermarket chains in particular, the Coles is up 1.6%, Woolies is up by about 1%, but there's one stock that is weighing quite heavily on consumer staples and offsetting that, and that's A2 Milk, which is the worst performer of the day. It's down by around 12%. It actually makes the lion's share of its profits from infant formula, and it updated the market today in a note saying that due to temporary product availability issues it's having in China, freight challenges because of everything happening in the Middle East at the moment, low inventory levels, it has downgraded forecasts not only for revenues and its margins, but also for profits in 2026. So now reckons profits are likely going to be flat, and it's no longer expecting growth over the year.
So we mentioned energy stocks have been higher. We're seeing Karoon Energy doing second best. It's up around 5%. Beach Energy up around 4%. Woodside and Santos up between 2 and 2.5%. There has been some news out of one of the energy stocks today. This is fuel giant Viva Energy. This owns one of the 2 remaining oil refineries in Australia, and it's been in the headlines today after the corporate watchdog ASIC questioned some accounting numbers in its results and has forced the company to change how it values its petrol stations. Now, the issue that the watchdog raised was that Viva Energy is grouping some convenience retail sites together when testing them for an impairment rather than assessing each site individually, and that means the company now faces an extra $25 million in impairment charges for the year ending 31st of December 2025 following that audit. But it seems investors have been shrugging off that news because its share price is up around 3.5%, and certainly following that surge in oil prices. I also wanted to highlight an announcement out of Uber today. It's actually introducing a temporary fuel surcharge of 5 cents per kilometre in response to the fuel crisis. Now, the surcharge will roll out from this Wednesday, and it will run through until June the 8th, with 100% of the surcharge going to drivers, it claims.
And A2 Milk, obviously I just mentioned it's the worst on the ASX 200. If we go a bit broader than that, EML Payments is the worst for the All Ordinaries Index, which is the 500 biggest stocks on our market. 35% lower today, and it has hit a 13-year low as well. Now, the payments company has slashed its profit expectations by between 15 and 20% for the year. It's blamed this on 2 things. The first is that it's taking longer than expected to get a few new projects up and running, which means they're not contributing to the bottom line. And secondly, it said that trading in the Northern Hemisphere businesses have been well below forecast during the past few months, and they're assuming that the lack of momentum could continue into the months ahead as well.
I'll also mention the top performer today, Telix Pharmaceuticals. This is the cancer diagnostics business. It's up by around 7.5% after announcing it has teamed up with a US biotech giant to work together on developing new cancer treatments using targeted radiation.
Yeah, and the best on the All Ords today is Monash IVF. It is up around 16%. It received a revised takeover offer from a group of investors led by Genesis Capital and also Soul Patts.
All right, you mentioned earlier what US futures are doing at the moment. They are pointing to a small decline when the market kicks off later tonight. US futures pointing down by roughly 0.5% for each of the 3 major indices. We also have earnings reports out of Goldman Sachs tonight, but plenty more over the course of the rest of the week as US reporting season unofficially kicks off with the major banks. We also have Netflix out later this week on Thursday night, so that'll be Friday morning, our time to look forward to.
Yeah, so the US-Iran talks and everything happening there will be the key thing to watch this week. Jobs data as well on Thursday and plenty of dividend payments. So I think that wraps it up. Have a great evening, everyone. Make sure you tune into the morning podcast. Bye. This podcast is prepared, approved and distributed in Australia by Commonwealth Securities Limited, ABN 600672543999, AFSL 238814. The information does not take into consideration your objectives, financial situation or needs. Consider the appropriateness of the information before acting and if necessary, seek appropriate professional advice.
Today, the United States attempts to take control over the Strait of Hormuz as Iran peace talks fail.
Plus, President Trump sees fuel prices staying high through the midterms.
And Hungary ousts Viktor Orban after 16 years in a major European power shift. This is Reuters Morning Big, bringing you unfiltered market news and analysis straight from the Reuters newsroom 7 days a week. I'm Amanda Cooper in London.
And I'm Mike Dolan. It's Monday, April 13th.
Well, Mike, you've been off for a week, but I fear that really if you were on top of what's happened in the last 12 hours, you are all caught up.
Ceasefire? What ceasefire? It does appear the markets are still trading every headline on this, and we got numerous over the weekend. Again, these Islamabad talks between the US and Iran seem to come to naught, and there is clearly still sticking points, that being the conflict presumably goes on, even though we are in the middle of the 2-week ceasefire still, which is unclear whether that holds now. But maybe most significantly, as we said at the top of the show, the statement from President Trump that the US Navy has been asked to blockade the Straits of Hormuz in itself is ups the ante to some degree about the critical oil waterway that is central to the whole world market concerns in some respects. What exactly is meant by this blockade is less than clear. It appears that it's an attempt by the US to stop Iran tolling ships going through. So any ship that is paying Iran the fee will be stopped by the US Navy. And he also said that there would be attempts to clear sea mines from the area as well. But the Iranians clearly don't buy that. They say any military ship in the Straits will be considered fire. So we watch and wait. But it's from 10 a.m. Eastern Standard Time that blockade will go into effect.
Well, yes, and last week in the run-up to the peace talks, I don't think there were very many people betting on what might look like a successful outcome, like a lasting peace deal this past weekend. But I the word off-ramp all last week, that, really no matter what happens, the two sides are now somehow communicating directly with one another. There's a desire on both sides to bring this to an end one way or another. And it feels like with the talks ending, as you said, in nothing, and this new escalation on behalf of President Trump blockading the Strait of Hormuz, the sense of people I was talking to last night as the currency trading was getting underway was this idea of an off-ramp at least seems to be in the background for now, and not really surprising to see oil up about 8% as we're talking right now, stocks and stock futures down, dollar gaining a bit of a safe haven bid, and just the whole thing feels really rather nervous right now.
Yeah, and I think probably most concerning was the another statement from Trump, which was that he expects fuel prices, certainly gas pump prices in the States, to stay high or possibly even higher through the midterm elections in November. Now that everyone out into at least another 6 months, and it also that the domestic political consideration that many people in the markets thought would force Trump to de-escalate this conflict relatively soon doesn't appear that he's thinking in those terms, and seems to be quite happy to keep the pressure on Iran going, whether through wise at least that long, and that I think is much more of a concern, because as we saw on Friday, the instant inflation impact is pretty clear. We have headline US CPI now at 3.3%, the highest in almost 2 years, and even though some people pointed to subdued core prices when you exclude the energy costs, the longer those energy costs are this high, the more it will feed into those core prices to manufacturing prices and other things.
I think turning a minute away from the US, although of course not entirely, to Europe, where we saw Viktor Orban, the Hungarian leader who's been in power for 16 years, get voted out in a watershed moment for not just Hungarian politics, but possibly for Europe more widely. We've seen the foreign at multi-year highs against the euro and the dollar this morning. Investors obviously embracing this. But what other implications are there possibly for the markets in this election outcome?
Yeah, as you say, I mean, it's a huge deal for Hungary itself. It's a super majority is likely. That's a 2/3 majority for Peter Magyar's party, the opposition leader. And just to focus in on the numbers and why the market should really care in Hungary, this will likely release something in the region of 18 billion euros of frozen EU funds to Hungary. Now that's about 8% of Hungarian GDP, which is a huge deal for the Hungarian bond market for sure. But you can see why that's a big deal for the economy. But Hungary's a relatively small economy, and as you said, for the broader European Union, this is a very, very big deal indeed, because Orban was kind of a refusenik, if you like, in the middle of Europe. He objected to many European policies and vetoed, for example, a $100 billion loan to Ukraine. He's clearly very close with Moscow. He's a big champion of Donald Trump's MAGA movement. And to see him swept away with such a landslide is an extraordinary moment around the world. But it is a positive for the European Union in its cohesion. And now we wait to see what the new government will bring.
Moving this weekend, but I haven't packed a single thing.
Hassle-free shifting के लिए porter packers and movers है ना? We handle it all. End-to-end packing, loading, unloading and unpacking. Enjoy best-in-class multiple packing options. Tap the banner now.
I'm Christina Parts-Nevelis, and this is your CNBC Tech Check briefing. A slew of analyst calls in the tech space to kick off this trading week. Wells Fargo rated Tesla as underweight, citing limited robo-taxi progress. KeyBank is holding Nvidia's overweight, saying it's bullish on the stock ahead of earnings later this quarter. And TD Cowen analysts still see Netflix as a buy and see the streamer as, quote, well-positioned to continue its global ramp via organic growth. OpenAI is opening its first permanent London office with a capacity of over 500 team members. The move actually comes after the company's major infrastructure project, dubbed Stargate, was paused in the UK, with OpenAI blaming the cost of energy and the country's regulatory environment for the delay. Still, OpenAI is pursuing its business in the UK and said it would make London its largest research outside of the US. And late last week, a man was arrested for allegedly throwing Molotov home. Police department responded to a fire at Altman's Northeast resident after a suspect struck device at his home around 4 a.m. Friday. An OpenAI spokesperson confirmed the attack in a statement that said, "Thankfully, no one was hurt." Was laid outside of the company's office in San Francisco had burned down OpenAI's headquarters. That's all for today. We'll see you back here tomorrow.
Anthropic's mythos. Do we have a right to be afraid of it? Welcome to a special edition of Hashtag Trending. I'm your host, Jim Love, and in this edition, I'm going to cover only one story that has been troubling me all weekend. But before we get into that, let me thank our sponsor, Meter, for their support in bringing you this podcast. Meter delivers a complete networking stack, wired, wireless, and cellular, in one integrated solution that's built for performance and scale. You can find them at meter.com/HTT. Okay, so let's get into it. On the weekend AI show, Project Synapse, we covered a lot about Mythos, Anthropic's new model, which they've said they're afraid to release just yet. One reason, and we covered this in stories last week, is that apparently they've found a real spike in the model's abilities, particularly when it comes to finding bugs in software code. Anthropic says, without exaggeration, Mythos could reshape cybersecurity. Anthropic says that Mythos can uncover long dormant vulnerabilities in major software, including, for example, a 27-year-old OpenBSD bug, a 16-year-old FMMPEG flaw, and even multi-step exploit chains that can bypass sandboxes. OpenBSD, as many of you will know, is one of the most secure Linux distributions and is often used in high-security environments. Mythos found a bug in the code that dates back 27 years, which I can say, from what I've read, has been fixed. FMMPEG is a utility. It's an open-source multimedia framework and command line tool used to convert, encode, decode, stream, and process audio and video. It's often described as a universal media converter because it can handle a very wide range of file formats and media workflows. It's ubiquitous. And those are just two examples of software that is widely distributed, that have been reviewed probably millions of times. And this new AI found the vulnerabilities in next to no time at all. And as my co-host of the weekend show, Marcel Gagné, pointed out, there are also implications that it was able to not just find a bug, but to find situations where chaining several vulnerabilities together could lead to a new compromise. And it doesn't stop there. In virtually every major piece of software it was given, it found flaws, including operating systems and browsers. So we're at a major crossroad when it comes to AI software. When, and it's a when, not an if, when it's released or someone else finds a way to replicate it, it may create what might be one of the greatest challenges of our time. Virtually all of our software is going to have to be scanned and potentially fixed in a very, very short period of time. So this was a big story last week, but believe it or not, there's more. And I want to be really clear. I'm not saying the world is coming to an end. I'm not an AI doomer. But I have been mulling this over all weekend as I looked at various commentators and some original data from Anthropic and others. Because there was simply, and I hate to say simply, given what I've said about cybersecurity in the model, there's more than this model's ability to find vulnerabilities in software. There was a recent book titled, "If Anyone Builds It, Everyone Dies." Researchers described what they called the nightmare scenario for artificial intelligence. An AI that hides what it's thinking, one that works around its constraints, and one that finds a way out to break out into the open internet. Now, until this time, this has largely been science fiction. I actually wrote a version of that scenario in my last book, Elissa. I'll put a link in the show notes if you want to compare what fiction imagined to what's now being observed. Because Anthropic's own system card, the record of its testing, suggests that parts of that scenario